Imagine a world where every single person deserves a chance to get a loan not only to pay for basic necessities and bills, but to build up financial credits and records so that they can do more in the future. In this world, individuals can raise funds for both short term and long term financial goals, spend money on products and services that make them happy, and overall contribute to a flourishing economy. Imagine this world beyond China. Imagine this world brought into the culturally rich and diverse region of Southeast Asia. Finvolution makes this world possible. After establishing a stronghold in China in 2007 and entering Indonesia, Finvolution is a fintech company with a wide range of data-driven tech services that rapidly grows in the consumer finance market. But our team realized that Finvolution has the potential to grow so much more. And today, we want to bring this world to Southeast Asia. Good afternoon, judges. My name is Julia, and I am joined by my teammates Annabeth, Ian, and Sarah. We are Team University of Toronto, and we are beyond excited to present our proposal for Finvolution to reach its full potential. To do so, let's take a look at what's been working well for the company. Here is a diagram entailing Finvolution's product and service offerings, categorized into B2C fintech services and B2B fintech empowerment. And while these systems have enabled the company to gain more than 108 million users, we must keep in mind that they were derived from data on the consumer and business behavior identified within China and Indonesia. So in other words, these services are successful, but they are limited in nature to the countries that they operate in. This presents us with a key insight that to expand in another country, Finvolution must also take on a strategy tailored to that country. Now, let's take a deeper dive into the technologies that FinTech Empowerment offers. Among Magic Mirror, Magpie Bridge System, Bright Mirror, and Smart Customer Services, these four tech-driven systems are currently all run by Finvolution's internal employees and systems, and subsequently being offered to external partners as services. In other words, these products and services are internally driven. And although this is clearly a key strength because it helps ensure internal efficiency, we realize that these services can be sold to more external partners across Southeast Asia. To demonstrate, we calculated the market size for this opportunity. And if Finvolution were to take it on, it has the potential to make $17.5 million per partner. So in addition to considering Finvolution's partners, let's also take a look at consumer analysis. Currently, customers take out loans conveniently and easily. However, they still face a lack of understanding for financial long-term sustainability. For instance, knowing that 60% of Finvolution's loans in China are used for daily consumption, such as purchasing groceries or paying for phone bills, it demonstrates that they generally may not be thinking about long-term financial sustainability or planning. And further research has also demonstrated that poor financial literacy rates in certain Southeast Asian countries are one of the most contributing factors to lack of awareness for long-term financial savings. More importantly, however, there is a lack of consumer-facing innovation for Finvolution's customers. What this means is that even though the company runs intense data-driven technologies and systems in the back end, there is significant room to leverage this technology and improve the customer experience to ensure long-term retention. So if Finvolution enabled more consumer-facing innovation, capabilities that would give them more control and planning over their finances, it has the potential to reach 306 million new consumers out of the unbanked population across Southeast Asia. With this, let's take a look at where we are now and where we want to be. Geographically, we are limited to China and parts of Indonesia. With its technology, much of it is internally data-driven, losing out on opportunities to sell to external partners. And lastly, with its consumers, many of them have a short-term mindset and lack the services to empower them with long-term financial sustainability goals. Where we want to be instead is across Southeast Asia and continue to be data-driven with more external partners. Most importantly, we want to be able to provide value to more customers, providing more financial capabilities to citizens and helping them achieve their long-term goals. So with this vision to go above and beyond, we are now presented with our key problem statement. How can Finvolution leverage existing capabilities to establish a strong presence in Southeast Asia? Well, first, let's decide where to enter. We've evaluated 4 Southeast Asian countries that Finvolution was considering for expansion. To determine this, we asked ourselves 4 questions. First, which of the countries have a lower consumer debt to GDP ratio, indicating underpenetration of consumer finance? Next, which country has low credit history so that we can enter and help develop their credit? Thirdly, which country has a larger unbanked population so that we can help them achieve a bank account? And lastly, which of the countries have a higher mobile banking trend, making entry easier for us? Upon evaluation of these statistics, we came to the conclusion that Vietnam would be the ideal country. Vietnam had a moderate debt to GDP ratio of 47%, and only 21% of the population have credit history. Furthermore, only 31% of the population have bank accounts, and there is already a growing trend of 45% converting to mobile banking. With this, Vietnam is the ideal place to enter, but let's scope out the consumer finance landscape there a little bit more. Overall, we see an untapped pool of consumer lending opportunities. As 70% of the population is under 35 years old, Vietnam is filled with young individuals who want to be open to loaning services, as well as opportunities for long-term financial sustainability. Vietnam is also a fast-growing economy with a stable political landscape, and the 70% internet penetration rate is an attractive statistic for fintech investors. So now that we've decided to enter Vietnam, Sarah, can you tell us how we are going to do it?
Absolutely, Julia. Introducing Reach and Secure. Reach is a short-term strategy that hopes to bring consumer-facing innovation to Vietnam. The target is to expand in the consumer finance market and reach the unreachable. Secure is focused on selling FinVolution's fintech empowerment services in Vietnam as the company accelerates in tech and data collection growth. In the long run, FinVolution will be able to secure strong growth. So let's dive deeper into Reach. We want to help FinVolution boost B2C presence in Vietnam through one, the Fintelligence program to help incentivize good credit behavior and optimize customer experience, and two, automate loan collections to minimize default and delinquency risk, all in all, helping us reach the unreachable. So going back to the rationale behind these features, we see Vietnam has a financial literacy rate of only 24%, one of the lowest in Southeast Asia. When FinVolution moves into a market like this, there's an element of risk that must be considered. Secondly, we see that 65% of borrowers prioritize customer experience over interest rates when choosing a medium of financing. And this ultimately serves as a make or break feature when entering a new market. So revisiting that point of the low financial literacy, we see a direct impact that it has on customer confusion and their understanding of not only how to repay their loans on time, but also why it's important. And as a result, we see higher default and delinquency risk for partners providing the money. So how do we help minimize that risk and also optimize customer experience by directly rewarding customers for good credit behavior? That's where Fintelligence comes into play, helping customers build their Fintelligence while building a credit history. After following FinVolution's typical credit assessment standards, customers will be placed into an appropriate tier. The tiers determine the size and term of the loan that they can take out. So a lower tier means they can borrow less money, but there's a caveat. When they repay the loans on time, borrowers can earn points, track their progress, and level up to the next tier. This allows customers to directly see the impact that good credit has on their financial capabilities. But what exactly does this tier structure look like? As you can see, here's the amount each tier allows you to borrow. For instance, tier 1 starts at $10 to $70, and as customers advance, they can borrow even more. This structure is based on the median household income per capita in Vietnam of about 8,000 USD. So ultimately, the higher up the tier, the more they can borrow and the longer the repayment deadline is. Now, why exactly does the system work? We know FinVolution is already doing this analysis on the back end, but by showing customers the impacts of good credit habits with a visually attractive interface, we further incentivize them to borrow more going forward, helping them build credit history and become loyal customers. So now that we've optimized the customer experience, how do we minimize our risk? Currently, with loan repayment, we see an automated message reminder going out with a follow-up from loan collection robots or a third-party agency. However, this is only done if the loan isn't repaid within 10 days. The issue is that when consumers have lower financial literacy rates, prompts like these are not enough to reduce delinquency because customers don't see the importance of repaying on time. However, with the new system of automated installments, we see that as money enters the e-wallet or the account upon the due date, up to 50% is automatically removed to repay the loan. Not only does this reduce delinquency and default risk for the company, it also ensures consumers don't build their debt up too high, allowing them to build up their credit score. So, stepping back and looking at the bigger picture, we want to help Finvolution reach the unreachable. And to do so, we had to tackle the low financial literacy rates and the high priority on customer experience by one, minimizing risk through automatic installments, and two, optimizing the experience with intelligence points. So, now let's take a deeper look on how this will be implemented. In preparation for launch in Vietnam, alongside market research, Finvolution needs to establish financial partners to provide loans, as well as hire a UX design team to design the new interface within the existing Finvolution app. The next stage is sandbox entry, which is essentially a soft launch test period required by regulation in Vietnam for fintechs to establish themselves as a licensed player. During this phase, we'll test with at least 100,000 consumers iteratively to gather data points and train the algorithm, as well as optimize tiers. After collecting feedback, we'll be set for a hard launch after year two to a much larger market, which we plan on targeting through a few key channels. So outside of typical social media, we plan on partnering with local utilities companies, grocery stores, telecom companies, and even universities, as those are the key spots where we see the unbanked population is actually consuming. Given the financial literacy barriers, we want the messaging to convey convenience, but also the benefits of building good credit, all in all leading us to a successful launch in Vietnam. So now that we've reached the unreachable, Annabeth, can you tell us more about how we can really secure strong growth in Vietnam?
Definitely. Thank you so much, Sarah. Let's dive into our second solution and secure strong growth. With our secure solution, we want to establish a stronghold across Southeastern Asia countries by leveraging our existing tech, data, and analytics capabilities. And more specifically, we want to sell fintech empowerment software to companies in Vietnam. Our customers consist of both existing players as well as emerging partners that come into the industry. But now the key question is, how do we know whether or not there is a market demand for the software once we do sell them in Vietnam? Let's take a look at the left part of the slide. There is an emerging preference for small to medium banks. And more importantly, their value aligns a lot with ours, thereby creating synergies for us to collaborate together. For example, small to medium banks are starting to humanize their banking experience and adopt a human design thinking centric sales process. And with our software, they can do just that. On the right part of the slide, there are more foreign institutions coming into Vietnam. And especially since the banking industry is growing at 15% there, the high growth rate will attract more institutions, making this a very lucrative market for us to capture. We calculated that by selling our software, capturing the growth of this market, we can reach 12 partners by 5 years and establish a cumulative revenue of $130 million USD. But you might be wondering, what really makes our product so valuable to these institutions? Let's take a look at the top slide. Our model starts with the data collected through our first solution, Reach. Then, as more customers take out a loan through Finvolution within the first solution, the more data we can get from them. However, for the AI to be trained, this data can't just be unorganized data, but rather labeled data that contains information on the customer outcome. This plays right into Finvolution's unique strategy that other firms cannot copy, where they can personally configure data from Reach. Now, looking at the bottom of the slide, the more data we have, the more we can train the AI to perform at a higher and better level. This way, we can create a model that is more robust and better suited to the Vietnamese landscape, more accurate and tailored to there. With this, when we provide the software to businesses, we provide more value, a better system, and more accurate AI algorithm to help them make better decisions. Now, who do we really sell to, and what exactly are we selling? We know that these are the 4 technologies that they do sell. And within our entry into Vietnam, we will be selling all 3 except for Magpie Bridge. But why not Magpie Bridge? This is because Magpie Bridge matches customers to institutions. And when we enter Vietnam as our first solution, Reach, we want to act as that bridge. Therefore, to avoid competition, we will not be offering this service, but the other 3 remaining. And the key question is, how much are we charging businesses when we do enter? Well, these products are divided into 2 categories, loan facilitation and post facilitation. And within them, we'll be selling Magic Mirror and Bright Mirror together at a transaction fee of 4.85%. And for smart customer services under the post facilitation service, we'll sell them at a price of 1.76%. But to induce businesses to purchase all of them, we'll offer a pricing discount bundle at 5.5%. After all the businesses purchase the software, they can use them for both their new clients and existing clients within their financial institution. For example, for new clients, our service provides end-to-end support all the way from using Magic Mirrors for risk profiling, all the way to using smart customer services for payment and recollection reminders. And to do this, on the bottom, existing customers, there's also a very similar process there. Now, to implement our second solution, Secure, the first 2 years are reserved for the implementation of Reach, the first solution. But right after this, our Secure solution will come in just at the right time. To do this, we'll firstly be hiring sales employees in the third year, in the beginning of that. Then we'll have them conduct business outreach to secure clients and businesses in Vietnam. Then we'll start selling loan and post-facilitation services simultaneously. And then after that, we'll also be selling more bundles together to induce more purchases. And after this, once we collect more data, we can now further improve the algorithm and the system even more. So now that we have established a strong position in Vietnam, this is where we can start selling these software services, potentially enter into the rest of Southeast Asia. Now, Ian, what are some key performance indicators and impacts to both of these solutions?
Sure, Annabeth. Now, let's take a look at the financial impacts on the local Vietnamese market. Through Finvolution's entry into Vietnam, we project a large increment to loan origination volume. Taking a look at the graph on the left, we can see such an increase, especially in year 4 and 5 of entry. With loan origination reaching just about $700 million USD in year 5, we see a total of $1.8 billion worth of loan origination, supporting 14 million users. Even more impactfully, we envision these 14 million users completing a total of over 19 million transactions across our expanded 12 partners in the country. These transactions signify a similar consumer behavior to what's been experienced in China, with user retention resulting in multiple transactions with the same user. Finally, the most revolutionizing impact is Finvolution's power to decrease the number of people who are unbanked. With the unbanked population currently at 70%, we envision a 7% drop from the users facilitated through our program. In terms of user growth, on the top left of our graph, we expect a slower kickoff with the user acquisition. This is because regulations in Vietnam require that we enter the regulatory sandbox for the first year of entry, as mentioned by Sarah. But after this, we will see a stronger takeoff into year 2 and 3, where the B2C effects really solidify, resulting in a total of 14 million users by year 5. Now heading to the pie chart, we also expect expansion in the number of partners we work with, scaling up every year to reach more users and facilitating more loans with varied institutions. Finally, let's take a look at the graph on the bottom. With revenue growing to roughly $50 million in year 5 and expenses tied to origination and servicing, alongside SG&A reaching just under $30 million, we project a net income of $20 million by year 5, resulting in a 46% CAGR across the entry period in Vietnam. This is just in line with the 38% projected for fintech firms that many project in the region, marking Finvolution's successful entry into the Vietnamese market. Reach and Secure are impactful solutions, but they pose risks that can be mitigated. For the long-term solution of Secure, there's risk that the data points for systems in Vietnam are not strong enough to accelerate fintech services in the new location. We'll mitigate this by catering the AI training model to more influential qualitative and quantitative factors relevant to Vietnam. For the Reach solution, the new tiered system may be initially difficult to navigate for new customers, as they struggle to move between tiers. This can be adjusted by changing the tiers based on data we continuously acquire and provide material to educate consumers. Lastly, the most likely but least severe risk is the low financial literacy rates in Vietnam could imply a high default risk, but this can be avoided by increasing the percentage of automatic installments. In conclusion, Finvolution is now equipped with a holistic strategy that will allow the company to reach the unreachable and secure the stronghold as a major player in the consumer finance market. In other words, it will be able to reach and secure its dominance across Southeast Asia. Thank you for listening to our presentation, and we'd like to open up the floor to any questions.
Thank you. Now it's a Q&A. We have 15 minutes.
Thank you.
Thanks.
The countdown start from now. Yeah.
Thanks. I have a quick question. On the 5 tiers that you have, can you talk a bit about how did you reach the conclusion it's 5 tiers, and what were the, how did you reach 5 tiers?
Yeah, absolutely. So I believe I mentioned kind of the median household income in USD was about $8,000, and all of these tier amounts are in quantified based on US dollars. And we saw that even in China, a lot of the loans were being used for daily consumption purposes, whether that be groceries or living expenses. And so we applied that same kind of philosophy of the loan consumption here. And so we decided to start with kind of a more smaller, approachable loan, being about $10 to $70 with a really short repayment period to help consumers build their credit up a little bit faster. And then we built up to, for example, the last tier being those business expenses. And that's really targeted at the SMEs and the SME growth in Vietnam. And really what that allows individuals to do is once they work their way up to that kind of entrepreneurial status, they can take out those loans and use them for business expenses. And we see that really we are trying to attack the more introductory market. And so once these consumers reach that more mature stage, they're likely going to seek more of a formal banking institution. So we're kind of bridging that gap between the unbanked and the formally banked population. So that was the justification between our different 5 tiers, I guess. I hope that answers the question.
Yep, thanks.
I'd like to, sorry, go ahead, Ahmad.
Sorry, just to clarify on this. So who is providing the capital? So is Finvolution just going to be the platform, or also providing the capital behind these loans?
Yeah, that's a... Annabeth, go ahead.
Oh, awesome. Yeah, I can definitely jump in on this. So exactly like what you said, financial institutions, the people that we partner with, they will be providing the loans, but our system facilitates how much loan they can be eligible to apply for. So then this way the partner knows, okay, this person is eligible for $10 to $70 based on their risk profile, their purchasing history, and etc. And then once we show evidence that they are improving in terms of their loan repayment, building up their credit score, they move on to tier 2. That's when financial institutions can then give them more loans.
Okay, so the initial tier will be funded by Finvolution's own capital, and then from tier 2 onwards, and it's financial institutions.
Sorry. Just to clarify. So all of the funding is provided by financial banks. We serve as the bridge to tell financial banks how much they should be eligible to get the loan out.
Okay. But the pricing of those loans, is that purely set by Finvolution, or will different banks choose what interest rates they will lend at for different customers?
For sure. I can jump in, and then if one of my teammates wants to jump in as well. So Vietnam has very specific kind of guidelines and regulations in terms of interest rates for even microloans. And so it's going to be largely dependent on the comfort of these financial institutions. But the logic is that the smaller tiers would be a little bit more flexible because they're smaller amounts, less risk exposure. And so as we build up to those higher amounts, it would be based on the comfort of the bank as well. And so that's where our Magpie software also comes into play, because we match the consumers to the institutions based on different profile assessments. And so it might vary between banks, but we match them based on that Magpie software.
I'm a little bit confused because I think I saw that Magpie Bridge would not be rolled out, or I thought I saw a slide about that. And I'm also trying to understand the interplay between the unbanked population, because this particular tier structure seems to rely on the existence of a bank account. But I also saw something about reducing the number of unbanked individuals in Vietnam. Can you tell me how all of those interconnect?
Yeah, for sure. I'll jump in the first part of the question, and then for the unbanked part, Ian, feel free to jump in. So with regards to Magpie, we are using Magpie internally for our first solution. So when we provide the tier system, when we provide the installments, any loans, we will be using Magpie. But then when we enter into Vietnam, when we want to target the B2B market, when we sell the softwares to the businesses, we will not be selling them Magpie, just because we want to operate in Vietnam, serving as that bridge. So when we enter Vietnam for the B2B market, we will not be selling Magpie, but when we enter Vietnam in the B2C market under Reach, we will be using Magpie for any operations that we do. I hope this answers the question a little bit. And then Ian, feel free to jump in on the second prompt.
Yeah, for sure. In terms of the unbanked population, we're currently seeing a high amount of people, 70% of the population, who literally don't have any sort of connection to any financial institution. They can't take out small loans, big loans, let alone $10 that we've even mentioned here. So in terms of taking from unbanked to bank, we'd really be just offering them that initial first step to get that connection to a bank. We have them gradually move through our tier system to build up their credit history. And that's what gives them the availability and the ability to reach the bank to get a formal banking relationship with with those small, medium-sized Vietnamese banks. So initially, they wouldn't really have a bank account registered because that's exactly the problem that exists.
So if I want to borrow $15 for groceries that I'm repaying in 10 days, I give you my data, you put it into a system, and then you tell me go open a bank account, and then I can borrow $15?
Not necessarily open a bank account. I think
well,
Sarah,
if you're unbanked, right? If you're unbanked. So
yes.
I'm trying to see sort of how this would actually play out in real life for the consumer, right? Because it sounds like
for sure
there is some nexus between an existing bank account and giving of the loans. But the Magpie Bridge system, as I understand, is about matching different banks. So it seems like to get a $15 loan, I would either have to open a bank account or switch bank accounts. So it sounds like a rather arduous process, especially for the promise of something that at least from an absolute scale isn't a large amount of money. And then I think the other thing I wanted to know about that a little bit is in the repayment, there was this idea that it would just be kind of swept from another account. But how does that work if I don't have bank accounts and if I don't have $15 to buy groceries in the first place? Is the assumption that people are not repaying because they don't know that they're supposed to repay, or is it because they don't actually have the money to repay?
For sure. So I can clarify that kind of movement of money a little bit. And so I'll use the example of a lot of these fintechs that are in Africa that have adopted these model, and it's essentially through an e-wallet. And so this can be done through a smartphone, through even a feature phone that's not necessarily a smartphone, and it just holds your money, and it's not necessarily tied to a bank account. So it's, for example, the same as keeping your cash under your pillow, but it's just a more digital form of that. And so we see that being adopted in a lot of African fintech firms. And so essentially the way the money moves here is very similar to that. So the financial institution is simply providing the cash and we provide the technology, but all of the money movement is through that e-wallet. And so, for example, money enters,
So just on that one. So the e-wallet, so you're proposing that you're creating an e-wallet.
So this would be based on the framework of how consumers in China would also be receiving their money. So Finvolution's model in China is also based on some sort of e-wallet or account, and that's how they've been receiving the money. And so we plan to adopt a very similar system in terms of how consumers will be receiving the money in Vietnam. So it'll be very similar to the model in China. The only difference is kind of the partners that we'll be adopting, and just the tier system is more of a consumer-facing difference. The internal systems are all the same as we adopt in China.
Okay, so in China, where they use WeChat and Alipay, you're suggesting that for Vietnam, you're going to use whatever e-wallet is available in Vietnam and dealing with the but even in that scenario, the consumer, go back to David's question, the consumer still needs to get a way to get money into that e-wallet, whether it's via a credit card or whether it's a saving account.
For sure. So we see that we're really targeting the individuals that have a smartphone. And so anybody with a smartphone is able to download those free apps in which they're able to the region.
Sorry, Sarah.
And so
you got cut off a little bit.
Oh, sorry. Can you hear me now?
Yeah.
Perfect. Sorry about that. But we'll see that the apps that they're downloading are going to be free. So similar to whatever access systems are in China, as long as you have access to a smartphone, which we established was kind of our target market, then they would have the ability to hold their money in a mobile way. And so that's really the market that we're targeting, is those who have access to mobile money, but not necessarily a formal bank account.
I'm not sure why they wouldn't just use the e-wallet to pay for groceries as opposed to opening a bank account to pull the cash. Can you help me understand that a little more?
And just to supplement, so here again, it's about when people have cash, physical cash, how is that going to come into the system in a digital form? Ultimately, in China, when people use an e-wallet, they have bank accounts, so they're just moving that money over into their e-wallet to then use for various transactions. So there is an assumption that you're already banked. For unbanked population, their key challenge is that all their money is in physical cash form. And as you say, they don't have the financial literacy to be able to convert that in the first place into a digital form, be that a bank account or anywhere else, to then move it around. So how are you going to get over that hump?
If I may hop in on the initial portion about the bank accounts and the current situation in China, I believe one of my teammates could hop on later. But even currently in China, I guess the biggest issue is that even with if they don't have a bank account, the biggest issue is they don't have any sort of history or any available way to develop their credit in terms of why this bank should even give a loan in the first place. So this is trying to tie that solution and offering them a means to prove that they could build up their credit, prove that they are able to repay these loans. But obviously starting from a very small amount, just to make sure that we could show these banks some sort of analytics, some sort of numbers, and let them know that, oh, these consumers have been able to repay at these rates, have been able to repay in these timeframes, and let these consumers build their way up very slowly. So they don't necessarily have a bank account or a living relationship with that bank. It's trying to build to that point through our solution.
Okay.
And sorry, I think there was a question around why not just use e-mobile e-wallets to pay for anything? Why not convert to cash? I think that's definitely something we would consider as a potential feature to directly allow them to use their e-wallets to pay. To be very honest, I think our team kind of focused on the mechanism of the tier, and we would definitely think that features for using e-wallets to directly pay would be something that is also very viable. There wouldn't be too much technicalities around that. It would just be storing the money on the app and then directly allowing them to pay, similar to what the social media platforms such as the WeChat app allows them to directly pay. It would just be the same mechanism as that. But instead of using WeChat, we would be using things like the Finvolution app directly. So that's definitely a great idea that we could implement when it comes to allowing people to rationalize that. Mm-hmm.
So you had some slides in the appendix. I think you were flipping through them. Can you just quickly go to them? Because they were quite interesting.
Yeah, for sure. And so maybe Ian, do you want to dive in on some of the financials and walk them through how we got the impact?
Sorry, before we hop into that, can I ask about the approximately 15 million loans? As I understand it, the population of Vietnam is approximately 100 million people. This seems like a rather ambitious target in terms of market capture here. Can you tell me a little bit about how you expect to get that high a percentage of the transactions in the market in so short a time?
Mm-hmm. Yeah, for sure. So if we could take over to appendix selected financials and assumptions, Annabeth.
Yeah.
So what we see in the top line right here is the total number of users that are projected to be using a mobile or a digital version of banking inside of Vietnam. And we can see that for these companies, there's actually a 38% projected CAGR for those fintech firms that do enter the country. So as you see in 2021, users under Finvolution, we see just a small 500,000 amount of users. And this is also due to the financial regulatory sandbox and the means to start really slow inside of entering Vietnam. However, even by year 5, that 14 million number that you got is our number in year 5, and that's projected to be roughly 20% of the market in Vietnam. And we believe that's a very reasonable number given our ability to match the banks to the right consumer through our business platform and through our ability to develop our AI model, train our model on the consumers that we gain in Vietnam and be able to offer a better, more accurate solution to these banks to be able to acquire these customers.
Those fees seem quite high.
Yeah, I agree. The fee is quite high, but I'll have to say it is based off of the Chinese model that they have right now. If we could go to appendix service fee derivation. Right now, we see their loan facilitation service fees and their post-facilitation service fees are as shown in the middle, but their total loan origination volume is 9.8 billion. This is in China. And in terms of the average transaction fees, this actually comes out to roughly 4.85% and 1.76 for the loan and post-facilitations inside of China. So really just applying this model into the Vietnamese economy.
Thank you very much.
Thank you.
The judges, thank you. The judges, please stay in the room to deliberate. Dear team, we will put you in the waiting room and bring you back for the feedback session in about 8 minutes. Thank you.
Thank you so much.
Thank you.